This is a quick review of the key economic and stock market events from last week. We had mixed financial data, ongoing market volatility, and significant stock movements. We saw persistent concerns about inflation despite a slight dip in the consumer price index. The labor market showed some signs of cooling. Consumer spending showed modest growth, but there were indications of softening sentiment. Manufacturing output was strong in February, but regional data suggested a potential slowdown. The stock market had a positive week, with significant indices recovering from previous losses. The Federal Reserve's interest rate decision and optimistic outlook were essential factors. However, concerns about tariffs continued to cause market volatility. Let's start with inflation. The consumer price index slightly decreased down to 2.8% from 3%. However, the Federal Reserve anticipated that their preferred inflation measure would remain steady, suggesting underlying pressures might still be present. Adding to this, a University of Michigan survey indicated a rise in inflation expectations among consumers. During their March meeting, the Federal Reserve decided to keep interest rates unchanged at 4.5%. Their economic projections, however, indicated an expectation for higher core inflation by the end of the year, revising it upwards to 2.8% from the previous 2.5% forecast. Looking at the February CPI in more detail, food and energy increased 0.2% in the indexes month over month. Interestingly, airline fares decreased by 4.0%, and gasoline prices fell by 1.0%. Within the food category, there were significant price jumps for eggs, which increased by 10.4%, and beef, which rose by 2.4%. The overall all-items index showed a 2.8% increase year over year. Moving on to unemployment, for the week ending March 15th, initial jobless claims rose slightly to 223,000, an increase of 2,000 from the previous week. The insured unemployment rate remained at 1.2%. The Federal Reserve's March projections anticipated a median unemployment rate of 4.4% for 2025, a slight increase from the 4.3% projected in December. The unemployment rate for February was reported at 4.1%, up from 4.0% in January. This slight increase in February and other indicators suggested a continued gradual cooling of the labor market. Turning to consumer spending, advance estimates for February 2025 showed retail and food services sales totaling $722.7 billion, a 0.2% increase from the previous month, and a 3.1% increase compared to February 2024. Retail trade sales increased by 0.5% from January and 3.4% year over year. Despite this slight growth in February, there were indications of consumers becoming more hesitant to spend. Factors like weakening consumer sentiment and job insecurity were noted as potential contributors. Forecasts suggested a moderation in real consumer spending growth throughout 2025. Interestingly, Bank of America data indicated a 0.3% month-over-month increase in spending in February, with higher-income households showing the most substantial growth. Manufacturing is a real bright spot. U.S. output significantly increased 0.9% in February. This was the biggest monthly gain in nearly 5 years, since July 2020, when the economy was recovering from the sharp contraction caused by the COVID-19 pandemic. This exceeded market expectations. The durable manufacturing index rose 1.6%, led by the motor vehicles and parts sector. The non-durable manufacturing index also increased by 0.2%, with chemical growth offsetting a decline in food, beverage, and tobacco products. In contrast to this strong national figure, the Philadelphia Fed's March survey indicated that while manufacturing activity in their region continued to expand, the growth was less widespread than the previous month. Their indexes for current general activity, new orders, and shipments declined, although they remained positive. However, the employment index in that region rose to its highest level since October 2022. Data for the manufacturing sector's real sectoral output for Q4 2024 was 98.61. Now let's look at the stock market. The major U.S. indices generally performed positively last week. The Dow Jones Industrial Average gained 1.2%. The S&P 500 index also closed in positive territory with a 0.5% increase. The Nasdaq index recorded a modest gain of 0.2% for the week. These gains helped the S&P 500 and the Nasdaq end a 4-week streak of losses. The week was marked by volatility, especially with a late turnaround on Friday. This volatility may have been amplified by the triple witching event, involving the expiration of 3 types of derivative contracts: stock options, stock index futures, and stock index options. The Federal Reserve's confirmation of a healthy economy and Federal Reserve Chairman Powell's view of potential tariff impacts as transitory seemed to reassure the stock market. The above positive economic data on the labor market and manufacturing likely played a role. Looking at sector performance for the week, the energy sector within the S&P 500 showed substantial gains of 3.2%. In contrast, the communication services and consumer staples sectors experienced slight declines of 0.1% each. The information technology sector showed no net change for week. Several major companies released their earnings reports during the week. FedEx reported earnings below expectations and lowered its full-year outlook due to economic uncertainty. Nike warned that declining consumer confidence could negatively impact sales, which is a nice excuse as their turnaround grinds along. Micron Technology, the memory chip maker, exceeded sales and profit expectations for its fiscal second quarter, but its stock price fell due to concerns about future gross margins. Several events impacted individual stocks. Supermicro Computer's stock gained significantly after an upgrade from J.P. Morgan. Boeing's stock advanced after winning a U.S. Air Force contract, while Lockheed Martin's shares slipped. Texas Pacific Land's stock declined on reports of insider selling. Other notable events included PepsiCo confirming its acquisition of Poppy, Genmab reporting positive clinical trial results for an ovarian cancer treatment, Western Digital appointing a new chief product officer, U.S. Foods launching new products, and Apple's shares lagging after a delay in a new Siri upgrade was announced. Last week presented a mix of positive and concerning signals. While manufacturing showed strong growth, inflation remained a key concern. The stock market saw a positive rebound, primarily influenced by the Federal Reserve's stance, but volatility persisted due to tariff concerns. Individual stock performance was varied, driven by earnings and company-specific news. The market continues to navigate a complex environment, balancing economic growth with anxieties about inflation and trade. The Federal Reserve's ongoing actions will be crucial in shaping future market stability. Thanks.